In this market update, I'm going to be talking about a major change in the financial world that everyone should be aware of. Hi, Jim Gore from THOR Wealth Management. The financial world is changing right in front of your eyes, and you should be well aware of what is happening. First of all, it all occurred because Russia invaded Ukraine, and that set the dominoes in place. And so what happened is on February 28th of 2022, the Russian central bank assets, foreign reserve assets, being held in the United States, the UK, European Union, and Canada were frozen, and they were kicked out of the SWIFT payment system, basically kicked out of the international banking system. But then what just happened last month on April 24th is a change. They were frozen, but there was a repo act that was signed into law, passed by the House and the Senate, that allowed the U.S. president to go ahead and take the Russian foreign reserves and give it to Ukraine for reconstruction. Then what happened just here on Tuesday of this week is the European Union, where most of that $300 billion that was frozen from Russia, most of it is in Europe, that was passed, that they allow them to take not the principal of the frozen assets, but they get to use the interest that's earned on it, and 90% of that interest is being used for military aid, and 10% is being used for other things to help Kyiv. So they're taking money from Russia right now, and this is a concern for some of the countries in the BRIC countries: Brazil, Russia, India, China, South Africa, and some other countries that have joined them more recently, like Saudi Arabia. And if you look at this, this is a reason why they're very concerned. If you look at how much is in foreign reserves right now from those BRIC countries, it's pretty significant. You have China right up there at 3.6 trillion with a T dollars in foreign reserves. Then you have India, which you can see is about 500 billion, and then Brazil 300 billion, and Russia's a little bit under 500 million. So there's quite a significant reason for them to be concerned, and there's a reason why they want to go ahead and start up their own currency if they could. But it's not going to be that simple to do. Because if you look right now, when you're trading, if I'm a foreign country like Guyana and I'm selling some of my oil, do I want it in renminbi? No, I want it in US dollars so I can turn it around easily on the world markets and go ahead and use that money to buy other things from other countries, because the dollar is right now the king in foreign reserves. If you look at it right now, 50% of the foreign exchange reserves are held in US dollars. European Union, it's about 20%. China is less than 2%. So China is trying to get out there, but no one wants their own renminbi. You want to make sure that you have a currency that is stable. And this is something that is showing that, hey, it's going to take a long time before China is going to do this. However, China has to be concerned. They're talking about invading Taiwan. They've got $3.6 trillion in foreign reserves. What would that mean to their economy if that were frozen? That would be very detrimental, and especially owning U.S. Treasuries. Right now, they own $775 billion in U.S. Treasuries. Pretty significant. Roughly about a quarter of what their foreign reserves are. But they've been selling that off. You can see that here, especially more recently. In April and May, March and April, they kicked up, this is the amount that they've been selling of U.S. Treasury bonds. So they're trying to reduce those Treasury bonds. And you can see that here, the last time that they sold off, it was over $100 billion that they sold off out of their U.S. Treasuries. However, they did that back in April. Well, look at what is happening. They have to put that money somewhere else. And what we think is happening is that money's going into gold. And you can look at this chart here, which is looking at the sales of U.S. Treasuries by China's central bank. And when it picked up, that's exactly when you saw gold prices pick up as well. Very important in an era like this, where countries are going to be fighting for currency wars, that you want to make sure you've got some other assets, hard currencies, whether it's commodities, real estate, gold, silver, because that's going to protect you in an environment where maybe the dollar won't be king, but it's going to be a long time before that happens. But in the meantime, China's got to do something with those foreign reserves to protect themselves from other countries basically taking it from them, especially if they invade Taiwan. They're going to be buying hard currencies like they are with gold that we believe they're doing here, but they're also buying oil, they're also buying natural gas and coal, hard assets. This is a reason why you don't want to have all your assets just here in the United States, and why it's important to make sure that you've got some exposure to some commodities, and especially gold. If you have any questions, as always, reach out to us at thorwealthmanagement.com or give us a call. Take care, and look forward to talking to you in a couple of weeks.